This is Notepad. I'm your host, Ibrahim Sani. We are talking about CTOS Digital Bhd. Earlier this morning, they have launched their prospectus for their upcoming initial public offering or IPO on the main market in Bursa, Malaysia. And of course, it's not just about CTOS Digital Bhd. It's also about the future of credit ratings and perhaps improving your credit score, not just on an individual basis, but of course, corporates as well. Here to unpack all this is Dennis Martin, the Group CEO of CTOS Digital Bhd. Dennis, congratulations on a successful launch earlier today. Let me go through with me some of the ideas that went through your mind just now when you launched the prospectus.
It's a very exciting time for us. It's just another stage of a long journey. You know, CTOS has been around for over 30 years. We've come from this very small family business to where we are today to be listed on the main market. It's a very exciting time. It's an exciting time for us, for our customers, for our staff, and now for our new shareholders. So pretty exciting.
Okay, it's not just that 30 years ago, people might not know the direction or the future of credit rating. It's a rather pioneering work to start this kind of business then. And of course, today you are the leading credit provider for the country. And it is understood that CTOS Digital Bhd has a 20% stake in the similar kind of business in Thailand. What would be some of the ideas that you project 30 years from now, considering that you guys are quite the market holder or market share leader in this country and in Thailand?
Yeah, look, I think what we've done over the last few years is really transform ourselves into a truly digital organization. And I think that's gonna be the case going forward as well. So everything that we have now is digitally enabled. We've developed a whole series of products and solutions that help a customer life cycle, from onboarding new customers to managing those customers to helping at the other end of it if things go bad. And that's all digital now. And I think that's going to be the future as well. And I think with the environment that we're in now, with the COVID situation, it's never more important than it is right now to be that digital organization that we are.
Okay, there's a few things that we need to unpack. First of all, why list? Why this time? 2021 isn't a good year for many. What do you think is going to be harnessed from listing in the middle of this year?
Look, I think we've come to a point in our organization where we are very strong. We have good, strong financials. We have a range of products. We have a good client base. All the fundamentals are there to make this the successful launch that it has been for a listing. And honestly, if there's any time to launch, I don't know when is a good time, but why not now? I mean, we really are a digital company. And like I said earlier, if there's any time you need a digital company, it's now. We've got strong support from institutions. This has been a great journey for us. And honestly, I just don't know when would be a better time.
It is reported earlier that your company targets 1.2 billion in the IPO. Do you think that this is still possible?
Yep. So we've got 1.1 million shares up for grab. That's about 50% of the company in the large share capital. That's what's out there for both institutional and retail. We have done a good job in getting a significant number of investors on board, and so absolutely we'll achieve our goals.
And of course, this would put CTOS at about, or valued CTOS at about 2.4 billion ringgit, which is quite of an indicative journey towards corporate Malaysia, because we really don't know how much a credit company should be worth. And of course, CTOS being listed as 2.4 billion ringgit gives us a good picture at the value of this industry. Where do you think this industry is going to lie in the future? When you said digital, could you talk more about that?
Sure. And if you're looking for how we have got to this sort of where we are now, you look at comparables for our industry globally, we're in that sort of level. Where it's going to go and the digital journey that we're on. So, we've launched a whole range of new products recently. I think some of them, let me just quickly talk about. First of all, eKYC. It wasn't that long ago when banks, if they wanted to open a new bank account, if customers wanted to get a new loan, they would physically have to go into a bank branch and do a thumbprint scan. Well, those days have gone now. So we've developed a product. We worked with B&M through their sandbox to get this through. It's called eKYC. It does a few things. So first of all, it has facial recognition technology. It has OCR technologies to read your IC card. And we also match that information to our own database. And then, of course, we can do what's called knowledge-based authentication, where we can ask you questions that you should know the answer to if you're the real person, but we know because we've got the data. And so you put all these four things together, you have quite a comprehensive way of making sure that the person you're talking to digitally is the real person. And so now banks, large non-banks, SMEs, large SMEs, they're all using the solution so that they can bring on board customers, even in a lockdown situation, digitally now. And I think that's just one example of our digital process. We have others. We have a fraud bureau now. We work with most of the major banks in Malaysia, and they use our digital fraud bureau to identify potential frauds in applications for loans. And so they give us their application information. We match that information against other known application information, against other known fraudsters, etc., to find discrepancies. And so we let the banks know so they can go and research and see if that actually is fraud or not. And there's a whole range of things. We've got analytics products. We have a consumer score, and we have an SME score. So let me just briefly tell you what that is. So a score is a 3-digit number, which really summarizes all the information that we have on you. And so the higher the number, the better. That's either for consumer or SME. And so, and I can keep going on. We've really built out a whole platform of digital products to support our customers' journey.
I think the most important thing right now is I think people can see the upside of getting good credit or utilizing credit. But I think the bigger item right now is to talk about data privacy, access to data. While I'm sure I want my financial institutions to know more about my credit score, I too want to know about it. So what would be some of the ideas that CTOS is working towards in improving credit knowledge for the customers, either individuals or businesses?
Actually, I'm really pleased you asked that, and that's very important to us. So financial education, financial literacy is a big part of what we've been looking to do over the last 4 years. We've really put on board about 1.3 million consumers already who actively look and check into their own credit information with us. But to really push this along, and during these difficult times where we're in lockdown now, we've just launched a new campaign, and just the other day, where we're going to give away for free, for a limited time, every consumer can get a copy of their own credit report with us. And it's a new thing. It's a CTOS Cares campaign, CSR initiative, and it's really about educating the market in these very difficult times. There's no better time right now than to understand what banks are looking at when they look at your credit profile. And so that's a new campaign we just launched yesterday. It's free to every consumer that isn't already with us for a very limited time.
Yeah, and of course that would also highlight the recognition of users to know, or customers to know more about themselves when it comes to their credit score. And I applaud CTOS, but do you feel that this might be revenue lost on your end by offering this for free for a limited time?
Yeah, look, we're not looking at this as revenue loss or a revenue gain. This is purely financial literacy. We're doing this because it's people are struggling out there. We understand that, and whatever we can do to help, we will do. And so this is just part of that CTOS Cares CSR initiative that we have. And like I said, I'm not looking at the revenue loss side of it. I'm not looking at anything else. All I want to do is make sure we educate and inform people right now.
Okay, so for prospective investors, they want to come in and they want to perhaps buy some shares of CTOS Digital. Some of the ideas that they want to think about would be regulation. What would be some of the laws that are inhibiting your business from growing? What would be some of the challenges that you need to navigate, not just in this country, but perhaps in other countries that you want to penetrate your business as well?
Yeah, regulation is very important to us. In fact, we have what they call the CRA Act, which was established in 2010, but enforced in 2014. And that really sets down around the rules and the regulations to how we have to act, how we look after data, how we protect people, how we make sure that nothing is given out without consent, and so on. And so this is very, very important to us. We work very closely with our regulator. Our regulator is the Ministry of Finance. But because we also get access to CTOS data from Bank Negara, we're also looked at by BNM. And so they also come in every year, they do an audit on us to make sure we're in compliance and so on. So this is very, very important to us. And every country has something a little bit different. And so here in Malaysia are probably some of the toughest regulations you'll see anywhere in the world on a CRA. Now, I know I've worked in CRAs all around the world, and the requirements on CRAs here is very, very stringent. And I think that's a good thing. I think it keeps things in play and make sure that we do our job to protect the information that we have. And that's very important because at the end of the day, CRAs are all around trust. You've got to trust us that we'll look after your data. That's important to you, and we've got to earn that trust, and we've got to make sure we don't ever lose that trust. And that's why we invest very heavily in our IT capabilities. We make sure we have the highest level of compliance to make sure that we have a very secure infrastructure to prevent ourselves being the victims of a hacking or a denial of service, etc. So that's a key focus for us.
Of course, it's not just about the growth of the company itself. It's also talking about the landscape, and it's not quite easy for a competitor to enter this space. This is, on a plus side, means that you have quite a strong hold on the market, but market share. But at the same time, because of little to no competition in this space, it might push you to complacency. So what would be some of the ideas on safeguarding the edge that you guys have on owning that market share?
The first thing is to correct you on the little to no competition. In fact, there are 7 CRA licenses here in Malaysia, and that's more than most countries have in their own countries. So there is quite a lot of competition out there. Direct competitors, there are 2. And then the other ones are smaller, they focus on little niche areas. So it is quite a competitive environment. And so that means we always have to make sure that we maintain the highest level of data assets. So, we've been collecting data for over 30 years. We've got a number of unique proprietary databases that we have, which sets us apart from our competitors. We also focus on product. So we keep bringing innovative new products, and I mentioned a few of them before. We also focus on making sure that we have the right people that understand this business and understand how they can help our customers. And that's important to us. And so there's a whole range of things that we continually focus on to make sure that we are ahead of our competitors. It's not an accident that we're at the level of strength that we are. It's through really making sure that we meet the needs of our customers.
One of the items that needs to be discussed is on managing your gearing ratio. It is understood that the IPO proceeds is meant to pay back some bank borrowings, but it's also important to talk about the possible acquisitions that you would take into account in the following 2 to 3 years.
Sure.
What would be some of the markets that you intend to enter? Other than Thailand, we spoke on earlier, CB Information in Philippines is also there, but what would be some of the markets that would be attractive for you to look at?
Yeah, let's talk about the ratio, the gearing first of all. And the proceeds of our IPO have been used to repay all of our debt. So at this point, we have no debt. We've also put aside money, around 56 million, for future acquisitions from the IPO. That is one of the key reasons we've done the IPO, of course. And so we do have assets. We are a cash generative business, so we add that to our stake from the IPO. It allows us to invest not just regionally, but also locally as well. So we're always looking for organizations that can add value to our customers, that's in Malaysia or outside of Malaysia, and where there are synergistic plays. So our investment in BOL in Thailand, where we own 20% of the public listed company there, has been a great investment for us. Not only is it a strong growing company, but there's a lot of synergy. I mean, we have a lot of strength in the SME sector here in Malaysia, which they don't have in Thailand, and so we can bring our products to service over there. In terms of other markets, we will continue to look. We're open to really establishing a presence in any strong established player. And the thing that I'm really excited about is that these organizations are coming to us because they see how successful we've been. They can see that we've grown this local brand. We are truly a Malaysian company to be successful, to being the largest ASEAN bureau in the region, and really understanding our story. And they're looking to say, hey, you guys did such a good job. How can you bring that story to our country? And so we are getting a lot of doors opened. We're just making sure those investments that we make are the right investments for the future.
How do you think the pandemic is affecting the planning of your company? Do you feel that things are getting stalled, or it's rather business as usual?
Yeah, and again, this is one of the advantages of being a truly digital company, right? I mean, we don't have to have brick and mortar. We really have the ability to offer our services digitally. We are impacted. Everybody's impacted by this lockdown and by COVID. We're no exception, but the reality is it's probably not impacting us as much as it may others. And that's because the only thing that we can't do is go and talk to new customers, and particularly in the SME space, because the SMEs are closed down. And so outside of that, all the banks are still operating, all the financial institutions are still operating, and most of our major customers are still operating. And so the impact to our business is very small. And what we found in the last lockdown was that as soon as the doors opened again, as soon as the lockdown was over, there was a lot of pent up requirements for our business. And so we had very, very strong growth soon after the lockdown was over. In fact, we had a very V-shaped recovery, if you like. So we had a slight dip when the lockdown happened, and then we got back to where we were, even better than we were, very soon after the lockdown ended. And I see no exception to that in this current lockdown that we've got.
Okay, we'll go for a short break. When we come back, we'll continue our conversation with CTOS Digital. Thanks for staying on with us. I have with me Dennis Martin, the Group CEO of CTOS Digital Bhd. They're going for an IPO. Dennis, let's talk a little bit more about your past, I guess, investors. And here you are courting new investors. A lot has been said about Credor being the PE firm backing CTOS. Credor has had an interesting history. They were backing Mr. DIY. And Mr. DIY went for an IPO last year, a rather successful one. Being a retail investor, I had some little stake inside Mr. DIY's. It's a pleasure to see the company doing very well as well. But that's beside the issue. The issue here right now is, of course, Credor backing good companies and potential companies that may grow even further. Do you feel that Credor being involved with CTOS is actually a vote of confidence for potential investors that might see this IPO as an opportunity for them to invest in your company?
Look, Credor has been a fantastic opportunity for this organization. So if we go back, pre-2014, which is before Credor invested, this really was still that family-run business. And it was comfortable doing what it did. But Credor came in 2014. They took an initial stake of 70%, now it's 80%. And they understood that it could do a lot more. So we looked around globally and looked at what we do globally and said, hey, look, there's a lot more we can do to help our customer base. And so they were able to invest ahead of the curve. So they knew that in the first couple of years of that investment that they made, that they weren't going to see this increase in profits, that the profits would be pumped back into the organization. And that was very smart. I mean, Credor is a very smart organization led by a very smart man. And I think they made the right decisions. And that's really enabled us to really go on the trajectory that we have now to have launched an IPO. I mean, we've really grown very strong, very fast with Credor's support.
All right. Dennis, can you help me out with the potential business growth verticals inside CTOS? The way I look at your company is that it's a foot wide, a mile deep, in the sense of being a bureau, a credit bureau. You would understand everything that needs to be needs to know from this particular business. But is that limiting for the company to do other things as well that might be in tandem with what you guys are doing? For instance, I don't know, helping out financial institutions in finding out new clients, trying to improve financial literacy amongst retail customers, whatever it is there an opportunity for you to improve on your business verticals?
Absolutely. And I think, if people ask me where are we at in terms of, the capabilities that we could have and so on, I always say we're still early stage. If you look at credit bureaus, CRAs globally, they're much more advanced stages than we are. And so there's an awful lot we can be doing. And that's what we're working on now. And so we have three key segments in the organization. The first segment is our key account segment. So these are all the large banks, telcos, insurance companies, all the fintech players, the peer-to-peer lenders, etc. We've got about 430 of those customers, and they make up that group. And that's where we've been focusing on growing recently. But the core of our business is actually the SME segment. And so about 56% of our revenues comes from the SME segment. And we've got about 17,000 SMEs that have registered with us to get access to our services through our product Credit Manager. Now, the opportunity there is very big because in Malaysia, there's somewhat close to 900,000 SMEs. Now, we know that 900,000 SMEs won't need our services. So what we did is we analyzed that and said, okay, how many of those 900 could actually benefit from our services similar to the ones that are benefiting now? And we narrowed that down to a low-hanging fruit of 100,000 SMEs. So we're only at 17% of that, and we're growing quite fast. And then we have the third segment, which is the direct-to-consumer market. We have about 1.3 million consumers now that have registered with us to get access to their own information and to keep checking it. That's off a credit active population of around 15 million. So still a long way to go there. So even within our own 3 segments, we've got an awful lot of space to grow. And then we have new segments. We've only just recently got into the property segment. We recently launched a report called the Tenant Screening Report, which enables landowners, property owners, to actually pre-screen tenants before they take them on board. I mean, it always surprised me here in Malaysia that people would rent out their properties to people they didn't know and knew nothing about, given that the property was typically one of their most important assets. And so now we have a product that can support that. And we will continue to build out new products in the property segment. We're also looking at the motor vehicle segment. So what information can we provide to people buying, selling cars? And then there's whole new segments in insurance and elsewhere that we haven't even touched on. And it's pretty bread and butter stuff for credit bureaus globally.
And Dennis, the final item that I want to discuss with you is on corporate governance. There would be new institutional investors coming on board. There would be a new way of scrutiny into how the company is going to be managed. How do you ensure that corporate governance or governance inside your company is going to be upheld to its highest possible compliance level?
I think that the most important thing is the makeup of the board. And so we have a very, very strong board, predominantly of independent directors. Tan Sri Izzadan is the chairman, and we've got others from both Ministry of Finance background, Bank Negara background, we've got legal, all sorts of a whole range of representation on that board. And as I said, majority are independent. And that's what keeps us honest, it keeps us on track. And they do a fantastic job. They really do manage us well in terms of making sure our strategies are aligned, that our corporate governance is in place. We have our audit and risk committees, of course, and we have our remuneration committees and everything else that you need as part of being a public company. But the structure and the representation of our board, I think, is second to none. I think the quality of the people that we've been able to attract on our board is really going to drive that corporate governance that you're looking at.
All right. Before we end this show, I need to talk to you about the horror stories about credit scoring. We know that in China they do that, and we've seen enough Black Mirror episodes to tell us the dim future.
Yes.
I don't know whether this is science fiction or this is real, but generally speaking, what would be some of the ideas that you want to talk about when it comes to credit score versus that very dystopian kind of outlook? How do we balance the two?
So the first thing is there's a very big difference between a credit score and a social score. So the ones that you're talking about, the ones in China and the ones on TV, those are social scores. We don't touch that. We don't get involved in that. Our scores are very, very simple. They look at your past behaviors in credit to predict your future behaviors in credit. So if you haven't paid off your loans, if you're always late, if you've got bad debt, then it's likely in the future you'll have bad debt or you'll be late in making your payments. And that's what a score tells you. It's obviously there's a lot more detail on that. It's quite a scientific approach to it. And we have data scientists that work for me that do that. But it's a very different proposition than as you've explained, the Black Mirror type approach to scoring, which we do not get near. The other thing that we're working on is something called an alternative data score. So, in Malaysia, there's a big group of people that can't get credit because they have no credit information. They don't have any secrets. They don't have any information with CTOS. They can't be scored and they can't get credit. And so we're working with non-traditional players, like telcos, for example, to try and build a credit model that will help these people get access to credit as well. So that's an alternative data model that we're building right now. But certainly we don't get involved in social scoring. We stay away from analyzing your Facebook and Instagram. We don't touch that at all.
So I guess making movies isn't part of CTOS's plans. I suppose.
No, not near term. No.
Final remark to potential shareholders that are watching us right now. What would be some of the key messages that you want to share with them before they go ahead and perhaps invest in CTOS Digital?
Yeah, look, a couple of things. First of all, CTOS has been through a great journey for 30 years. That journey will continue. And I think that's borne out by the level of investment from the cornerstones that we have. We have a record number of cornerstone investors for an IPO here in Malaysia. If that doesn't give you any confidence in the strength of the organization, I'm not sure what will. We also have a long runway of new product development. We've got a whole lot of segments, as I discussed earlier, that we have not even touched that will help to continue to grow this business for the next 20, 30 years, as you mentioned earlier. We have great people, a great team. We're very local. We're very proud to be a Malaysian business and to bring our expertise regionally. And I think that's important. and the future looks bright for us. So I'm very excited.
That was Dennis Martin, the Group CEO of CTOS Digital Bhd. They're going for an IPO. Keep out on the news on that one. Until then, thanks very much for watching and goodbye.